Hey everyone, welcome to the PivotBoss Pre-Market Report for March 18th, 2016. I'm Frank Ochoa, aka PivotBoss, with analysis for the current session. Here's a look at the ES. We've continued to trend higher in the ES, pushing through to recent highs and also reaching the primary target for the month at 2025. We mentioned before the pullback into the previous month's high could be the buying opportunity that slingshots this thing higher into those upside targets. Culminating with a move into 2061, the HVN above. We talked about this a long time ago when price formed a minor lower low versus the previous low here in January. Price slingshotted higher. I talked about the probability of price going back to the midpoint of the August range, followed by a continuation into the HVN and the top of that August range. And so far, we're about 90% there. So we've seen a significant continuation to the upside. We've seen higher value relationships week over week with the pivot range. Each week, pivot range has been defended and then slung to new highs. So we've seen this thing continue higher. The expectation would be for the next pullback to be a buying opportunity yet again, for a continuation and a completion of that move. And we're looking for a move into 2060. That's the HVN above. The top of the August range is 2077s. So that could be reached as well, but right now the HVN is here. If you're going to go from rejection down below, the expectation would be for you to go back to acceptance and then the next area acceptance beyond that, should it go bid, and that's kind of what's happening right now. If we take a look at the ES in an intraday right now, you'll see the key range that is built out from 0575 up to 27 quarter. That's the range we're watching right now. You can see we're holding above the top of the range on every rotation right now, which also coincides with the 25% weekly PB pivot at 2026. Right now, bulls are defending this area for a shot at new highs. New highs take you into the next upside targets beyond, which right now are going to be the primary target at 2045 half, followed by a 100% target at 2051. We also have the 100% expansion target from this key range. So for the most part, bulls looking to defend 2026s should be gunning for 2045 half and 2048. Those are the next major primary targets. Bears, on the other hand, want to keep 2038 offered short term and return price to 2027s with a shot at seeing a follow through to the downside. So right now, counter trend reversals looking to be defended off with 28s, 38s back to 28, 27. Okay, let's take a look at crude oil. Here's crude oil in a daily time frame. This one performed very similar here to the ES. We talked about the rejection off the bottom of the key range back here and how that rejection could lead to a reversal back to the midpoint of that range, which did indeed happen. So coming back to this midpoint off of this bottom right here was a high probability target. We then talked about the potential to see a continuation across the range into 40.50, the top of that range, and we've reached it today in overnight in pre-market trading. So we've already reached that target. So that's a final target off of this low, bouncing it back to the midpoint here, and then seeing a continuation to that target here. That basically completes that move. And now what we're looking for is how much higher do we go from here. Obviously the pullback we had into 36 worked out perfectly. Price only went a few ticks against that level and then saw a completion of the move into 40.50. So we've now got that move completed. Beyond 40.50 has a 25% expansion target into 43.43. That could be a major first test sell opportunity. So pushing into this level after this recent rally, this could be a high probability sell opportunity for a return to 40.50 and perhaps a return back to value at 37.97. So right now we're going to be watching 40.50 to see how price responds around that level. Obviously, given the current bounce off of 36s, we should see a little bit more strength, but at some point we'll likely see this thing pull back some, at which point we may see one more effort into 43.43. Taking a look at the intraday time frame, you can see how prices have continued onward. Yesterday during the trading room, we talked about the coiled up pattern here and how that usually projects expansion. We saw that expansion take place to the upside and a slow trendy market. And then overnight, we've seen an overnight key range develop here, where we saw a low come in at 39.92, a high come in at 41.13. Very nice impulse move. Whenever this comes back to the midpoint of the range, so if we pull up the mid here, 40.53, A pullback to 40.53 will cement this key range right here, and these will be the key levels to watch for the rest of the session and perhaps heading into the upcoming week. So this is going to be very important. Once price pull back, if price pulls back to this 40.53, that will lock in that key range, and you can then mark it up for key levels the rest of the session. All right, taking a look here at gold. In a higher time frame, we've been talking about gold. This is a 2500 volume bar chart, but right there you can see very tightly coiled, major expansion and a continuation. Here's the failure off of 1272s again. Price failed to hold above the 1263.90 again. Lower high here, and now we're shooting back toward the previous close. That's what I mentioned yesterday. Once we got up into this area near 1272, failure to get above that area opened up a potential reversal. And what I mentioned was failing to hold above 63.90 opens up a move back to 1251s. That's where we are right now. Failure to hold above 1251s rotates this right back to 5-day value, which is going to be 1232.60, and composite value, which is 1233.30. So right now we're kind of doing the roundabout reversal here, and I believe that any pullbacks into 1259 could offer a selling opportunity back to this HV and below. And basically you're seeing a breakout up, and then you're seeing this thing going to potentially roll back all the way across that range. So keep it in mind right here. The failure at 72s, the failure at 63.90, that was an important area that bulls needed to hold. Failure to hold it opens up a reverse all the way across the grain. Okay, let's take a look at the NQ now. Here's a daily chart of the NQ. We can see this thing has been trending higher. One thing about this is that obviously we pushed through the top of this range here. Very, very important. It was kind of sloppy the way it happened. Eventually this pullback led to the squeeze. We got to push into the 25% key level, 44.12, and we're holding it right now. Above that level, targets 45.01 and 45.23, the 50% expansion target. So those are the next two upside targets to play toward. Failure to hold above 43.55 opens up a return back toward 4,300 and perhaps as low as 42.20. So this is the key pivot to watch, 43.55. Pullbacks into that level from above want to be defended for a continuation. Otherwise, failure to hold above it brings up 4,300, which will be another level to defend as a bull, or even lower than that, 42.20. So very important how this is playing out. Continued uptrend is still intact. Above 44.12, squeezes into 45.01 to 45.23. If we take a look at the intraday time frame, you can see here the previous session basically formed a very clear key range. This range was 44.12 to 43.59. Midpoint right here at 43.86, and so far for the most part, price has traded within the middle 50% of this range. That's a neutral key range where price is trading in the middle chop. We're now trading, holding off the midpoint of that range. So you can see bulls are currently in control of the midpoint of that range, which now gives it more of a bullish bias. And that would mean that right now, with all of this coiled up action within the previous session's overnight range, that's very tightly coiled price activity. That tells you that a major breakout could be coming soon. And should it break to the upside, you have clear air into 44.39 with a shot at seeing 44.65, which is the 100% target of that range. Now, any failure to hold above the midpoint of this range, 43.86, will start to run the sell stops of the bulls that are in control, and that will open up a return to 5-day value, which is 43.55. All right, that's it for now. Let's see how this thing plays out the rest of the session. Good luck, trade well, and happy Friday.